Welcome to PyUncut, where we break down the biggest stories in technology and markets and make them simple, clear, and meaningful for you. Today's story is one of the most fascinating contradictions in the AI economy. It's about Micron and what analysts are calling the AI memory paradox. This is a situation where demand for memory chips could explode to unprecedented levels, yet at the same time, the company could face serious risks to its margins and profitability. Let's break this down in simple terms. To understand the story, we first need to understand what Micron actually does. Micron is one of the world's largest memory chip manufacturers, alongside Samsung and SK Hynix. These companies produce DRAM and NAND memory, which are essential for everything from smartphones to data centers. Now, here's the key shift. In the past, memory was largely driven by consumer electronics like PCs and smartphones, but today, that demand is being replaced and massively amplified by artificial intelligence. AI systems, especially large language models and generative AI, require enormous amounts of memory, not just for storage, but for real-time processing. Every time an AI model processes a request, it needs to access and move massive amounts of data extremely fast. This is where high bandwidth memory, or HBM, comes into play. HBM is a specialized type of memory that works closely with GPUs and AI accelerators. And right now, demand for HBM is so strong that Micron's supply is essentially sold out for the entire year. This is the first part of the paradox. Demand is exploding. Micron recently reported revenue growth of nearly 196% year over year, reaching around $23.9 billion in a single quarter. At the same time, DRAM and NAND prices have surged dramatically, with some estimates showing price increases of up to 90% in early 2026. This kind of growth is not normal. It signals what many analysts are calling an AI-driven memory supercycle. But here's where things get complicated. Despite these incredible numbers, Micron's stock has shown signs of weakness at times. Even after reporting record-breaking results, the stock dropped because investors started worrying about what comes next. This is the second part of the paradox. Strong demand does not automatically mean sustainable profits. Let's understand why. First, the memory industry is highly cyclical. Historically, memory companies go through boom and bust cycles. When demand is high, prices surge and profits explode. But eventually, supply catches up, prices fall, and margins shrink. Even in this AI era, that cycle has not disappeared. It may just be delayed. Second, the cost of staying competitive is rising sharply. Micron is investing tens of billions of dollars into new manufacturing facilities. These fabs are extremely expensive and require massive infrastructure, including power systems and specialized equipment. This means that even if revenue is growing, capital expenditure is also rising significantly, and that puts pressure on free cash flow and long-term margins. Third, competition is increasing. Companies like Samsung and SK Hynix are also aggressively expanding their HBM production. As more supply enters the market, pricing power could weaken over time. Now, let's introduce a new twist to this story: technological innovation. Recently, new AI compression technologies have emerged that can dramatically reduce the amount of memory required for certain workloads. For example, one new algorithm claims to reduce memory usage by up to 6 times without losing performance. At first glance, this seems like bad news for companies like Micron. If AI systems need less memory, wouldn't that reduce demand? This is where the paradox becomes even more interesting, because in many cases, efficiency does not reduce usage, it increases it. When technology becomes more efficient and cheaper, it often leads to wider adoption. More companies start using AI, more applications are built, more data is processed, and in the end, total demand for memory can actually increase. This is similar to what we've seen in other parts of technology. When computing became cheaper, we didn't use less computing, we used more of it. So even if each AI model uses less memory, the total number of AI workloads could grow so fast that overall memory demand still rises. That's the core of the AI memory paradox. Efficiency reduces usage per task, but increases total demand across the system. Now, let's look at the broader market context. The world currently faces a global memory shortage driven by AI infrastructure build-outs. Prices for DRAM and NAND have surged, and supply is being redirected away from consumer products towards high-margin AI applications. This shift is already having real-world effects. PCs and smartphone markets are slowing down because memory is becoming more expensive. At the same time, data centers and AI companies are absorbing more and more of the available supply. Micron has even started exiting parts of the consumer market to focus more on AI and enterprise customers. This tells you something important. Memory is no longer just a commodity. It has become a strategic asset in the AI economy. But again, this brings us back to risk. When something becomes too important, too expensive, and too competitive, it attracts massive investment, and that eventually leads to oversupply. That's the cycle investors are worried about. So, what should investors take away from all of this? First, the long-term demand for AI memory is extremely strong. AI data centers, autonomous vehicles, and advanced computing systems will continue to require more memory over time. Second, the short-term risks are real. High valuations, rising costs, and potential efficiency breakthroughs could create volatility in the stock. Third, this is not a simple growth story. It's a complex balance between demand expansion and margin pressure. For long-term investors, this means focusing on the bigger picture. Micron is positioned at the center of one of the most important technological shifts of our time. But like all companies in cyclical industries, it will likely go through ups and downs along the way. For short-term traders, this means being cautious. Strong headlines and record earnings do not always translate into immediate stock gains. Markets often move based on expectations, not just results. In conclusion, the AI memory paradox is a perfect example of how complex modern markets have become. On one side, you have explosive demand driven by AI, pushing revenues and prices to record levels. On the other side, you have rising costs, increasing competition, and technological disruptions that could reshape the industry. And in the middle of it all is Micron, navigating one of the most powerful and unpredictable cycles in semiconductor history. This is not just a story about one company. It's a story about the future of computing, the economics of AI, and the hidden infrastructure that powers the digital world. And as always, the biggest opportunities often come with the biggest uncertainties. This is PyUncut, helping you understand not just what is happening in technology and markets, but why it matters and what could happen next.